All right, let's get started so we don't waste much time. Let me share my screen before we go any further. As always, please read through the disclaimer first before we go any further. Just gonna give you a minute so everyone can read it. Okay, so what we're gonna be looking in today. Well, first of all, I think hopefully everyone is having a good week. The camera is on a different spot at the moment. So I have a different setup at my desk. So I had to put the camera at the bottom of the desk. So actually on the desk, it's not on the computer. So hopefully it's all good. Hopefully everyone can see me all right and hear me all right as well. If you guys have any problems, just let me know in the chat. So what we're going to be looking in today. So today is the day of the PMI. So PMI will be in focus. PMI from France, from Germany, from EuroZone, from USA. So we're going to have a look at those. If you haven't yet watched the video from YouTube, I've posted a video today talking about the PMIs. But we're going to go through everything again and talk about what could possibly happen and what are the trade opportunities that this can give to us. Okay. Then later on, we're going to talk about the Bank of Canada, that they have done a 50 basis points cut, and how should we trade that? How should we trade that what? How should we trade that 50 basis points cut? Okay. How should we proceed with the trading to trade that 50 basis points cut as we had, right? And then, of course, answering the questions for everyone. So very simple, 2 topics. I'm most likely going to spend the majority of the time talking about the Bank of Canada. We're going to go through the PMIs very quick. If you have any questions during the webinar, don't hesitate yourself. Just send me the question, okay? Oh, there you go. This is why. Let me close it. Perfect. Okay. Let's move on. Can I just get out of this? Perfecto. Make calendar. Perfect. All right. So it's just really pissing me off why I can't take this out, but that's okay. All right. So the PMIs we have, it's going to start in pretty much 1 hour. It's well, less than 1 hour. It's less than 30 minutes, actually. 25 minutes, we're going to have the first PMI. Sorry, 35 minutes, we're going to have the first PMI, and it's going to be from France, okay? Oh, sorry, it's 6:15, not 5. So at 6:15 p.m. in Australia time, we're going to have the first PMI for France, okay? Expectations are on 49 for the composed PMI flash, okay? And that's for the manufacturing, and that's for, that's for the services, and that's for the manufacturing. So the services PMI manufacturing. For the services PMI from France, we are looking at 49.9, up from 49.6, okay? So that's pretty good. We're expecting 0.3 higher than what it was previously. Then we have manufacturing PMI, 44.9 from the previous 44.6. So that's pretty good as well. And we can see on the market right now that the market is sort of tempting to break the highs on the 108.20, sorry, 108.020, so 108.020. Pretty nice how the market is trying to scale up those that wall there on euro dollar. Then later on 6:30, all right, 15 minutes later, we're going to have the big one, that is German manufacturing PMI. As I always say, Germany has a big take of manufacturing in the EuroZone. So it's always very, very important for us to pay attention on the Germany manufacturing PMI, all right? German manufacturing PMI is expected to come higher than the previous. Previous was 40.6, and the actual consensus right now is at 40.8, all right? It is 0.2% higher than the previous, but still, it is something already that we most likely will have some sort of volatility on the euro. The services PMI is expected to be the same as previously. So 50.6 from 50.6. So exactly the same, no changes at all. If something actually happened, then yes, we will have even more volatility. Okay, so just bear that in mind. No, sorry, 7 p.m. Sometimes I look at 19, or sometimes I look at 18. I think it's 8. I think it's 9. I don't know why, but it makes more sense for me. 19 means 9 o'clock and not 7, but that's fine. So 7 p.m. tonight, 30 minutes later from Germany, we're gonna have services manufacturing and manufacturing PMIs for EuroZone. So the services PMI is expected to be 51.5, so 0.1% higher than the previous, and the manufacturing PMI is expected to be 45.3 from 45, so 0.3% higher. No, well, not percentage, but it's a 0.3 higher than the previous. Okay, so indicating some sort of strength. And the market can we can feel the market already picking this up, because if we look to the charts, okay, let me open a new chart here very quick. If we look at euro dollar, we can see that from this morning, okay, to now, we've had this move up. Okay, this move is somewhat between 0.30% to 0.27 to 0.30%. Okay, if we count from the bottom here to the top, is around 0.30%. It is a pretty good move, to be honest, when we look to Asia session. So my opinion is that, yes, most likely we will see some sort of retracement on euro dollar coming this London session. Now, is this a good opportunity to long? Maybe still not that opportunity if we see some good PMIs, because what I'm looking at euro dollar, all right, this is a 1 hour chart. Some people may be thinking, oh, okay, if it breaks through this top here at the level of 108.070, okay, right here, then most likely we can continue to go higher. Well, I like to look at the chart when it comes to a technical view, a little bit more macro, a little bit more not that micro, okay? So I like to take in consideration the whole move down. So if we look at it, this was our first top to bottom, okay? And then we can see that right now is pretty much doing a pullback, okay? So my top is still over here. So this is my top, okay? This area here, this is my top where I have to break through to then actually change the trend, okay? So if I change the trend to break through these levels right up here, okay, this guy here, then yes, most likely I can see a actual opportunity to long euro dollar. Even though if we go to the 4 hours, okay, even if we go to the 4 hour, let me zoom out a little bit. It's just lagging a little bit today. I don't know the reason why, but this is a really big downtrend. Okay, more than 400 pips. Okay, 4,000 points, and we can see that yes, it broke through again. It broke through this bottom, but still, I don't feel like this is a sort of a retracement from this lag before. Okay, I most likely tend to take these as a consolidation. Okay, on the 4 hour, at least on the 4 hour, because if we look here, we're going nowhere besides up and down. Okay, and this is sort of the range we're looking at. Okay, and even inside that range, we have another range that is this one. And so 1, 2, 3, 4, and then broke through the top and broke this up, coming back down, but we haven't break through this top. Okay, so that means that we didn't have sufficient strength. Buyers didn't have sufficient strength to break through this bottom to this top, and therefore sellers continue to go lower. Yes, we may have a target that can probably continue to go even lower, and that target is here. I've mentioned that many, many times, okay? I had 3 targets on euro dollar. First one was this one. second one was the one we've just hit yesterday. And the third and last one is where we're going to probably ended up the month, okay, down there. Now, if PMIs can come higher, if all the PMIs, French, Germany, EuroZone, come all higher, come all better than expected, most likely, yes, we can have some sort of retracement, but I don't think enough to actually get on a long trade, okay? So let me just zoom out. There we go. Okay. Right here. So that's my breakthrough. If it breaks through here, then I'm looking to, long trades. Until we haven't broke through that top, I'm not looking to long euro dollar. I'm still looking to short euro dollar from that top. Fundamental wise, I say is the Trump trade is playing. We're not seeing my chart. Are you sure? Can you guys see my chart? Sorry, can someone just let me know if you can actually see or not? We can. Okay, so some people say they can. Abdullahi, maybe if you get out and come back, this will solve the problem. I think you had the same problem last time, right? So just rejoin, so get out, exit, and then come back. And then I think should be all good for you. Okay. All right. So from there, let me just a second, guys.
Yeah. That's what I mean. Like it has a crack that will come high.
Okay. Sorry. All right. So as I was saying, if it doesn't break through the stop here of 108.72, I'm not looking to long euro dollar. Okay. So I think it's pretty simple, to be honest with everyone. I think it's just a matter of it's a waiting game at the moment. Okay. Most of the traders will be looking at where, when, how can we trade euro dollar long? Well, if you can't trade euro dollar long, just don't trade euro dollar long. Okay. Look at the trend and trade with the trend. Okay. All right. That being said, coming back to the economic calendar, my expectations are it's very hard to, at this stage of the market to come here and say to everyone, look, this will come that way, this will come that way. A month ago was much more easier. All right. This is why I was actually saying to everyone, now I'm expecting this, I'm expecting that, and et cetera, et cetera. It's easier for us to play the trend than actually try to forecast something. Okay. So that's how I'm going to trade those PMIs. I will wait for everything to get out. Okay. And then from there, I will be looking to trade. If the results are better, then I'm looking to trade long. If the results are worse, downtrend is very strong. Bearish momentum continue to go. So definitely it is a good opportunity to continue to short euro dollar. Okay. Now, there's a very nice tool that I've discovered that today actually on FinLogic's economic calendar. That let's say you want to have a look at the services PMI for Europe, okay, for EuroZone. So let's click on it. It's going to open this little page, as everyone knows. And then right at the bottom here, you can choose, let's say, from 2020, so January 2020, all the way to 2024 October, as we are right now. And we can see that the probability of the euro area services PMI flash, okay, had a total of 10 under forecast and a total of 8 over forecast. So under forecast is more probable to happen. Rise time was 6. The rise probability of euro dollar going higher is 60%. And the decline time was 4, and the decline probability is 40%. Okay, so that's pretty simple, right? Very good maps. Now, five out of 8 times, the rise probability was 62.50%, the decline time was 3, and then the decline probability was 37.5%. So the average floating rate was around 0.1083 and 0.07 for the over forecast. Okay, that's pretty cool. As well, you can change the symbol here. So let's say you want to trade euro pound. Okay, and you want to see how this affect, how the euro manufacturing PMI, services PMI affect euro pound. So click on it, and you will see that right here, okay, on this blue little arrow here was the release, all right, and that was a lower release. Okay, the forecast was 52.1 and the actual came in 50.5. And the rise probability was 40% and the decline probability is 60%. So right now it's better to trade short at euro pound than actually trade long on this news. So it's pretty cool. You guys can play around. Again, it's very easy to get on FinLogix. You just type finlogix.com. Okay, click enter, and there you have it. To get access to that tool I was having, you just come to tools right here, economic calendar, click on it. Once you're on there, you can do these for any data. Okay, any data. So let's say I want to have a look at the let's go for PMIs again. But let's go for the USA PMIs. Where it is now. There we go, manufacturing PMI. So click on it, and then you're going to be redirected to this page, and there you have it. Okay, you can choose from when to when. You can change here. So let's say if you want to see S&P 500, for instance, you can do S&P 500. And you can see that the release was right here in the next hour. Sorry, that's the minute. This is a minute chart, okay? So 45, 46, 47. Yeah, that's a 1 minute chart. So you can see on the next, in a few minutes, it was a positive reaction, okay? So that's pretty cool. You can have a look on that later on your own. All right, moving on. Then after the Euro PMIs, we're going to have very important PMI as well. I think the majority of the market is expecting for it, and is the USA services PMI and manufacturing PMI. Okay, they are expected to come a little bit lower for services, but a little bit higher for manufacturing PMI. So in general, expecting to be mixed. Okay, we have a lower manufacturing PMI at services PMI at 55 expected from the previous of 55.2, and we have global manufacturing PMI at 47.5 from 47.3, so 0.2 higher than the previous. This is what everyone is expecting. Okay, now if that comes higher, then most likely we will continue to see a decline on euro dollar. But if that comes lower and the ECB, and the EuroZone PMIs come higher, then we may likely even break through that 108.75 that I was talking about on euro dollar, and we can continue, and then we can see some sort of retracement on euro dollar. Now, if we actually break through the area, okay, what would be the level of target? What are the level that we can actually target? Okay, if we look at the where it is, there we go. Okay, so sorry, it's very lagging. Wow, it's lagging a lot. I don't know why. So if we come to 15 minutes, zoom out a little bit. Wow. That's not good. Okay, there we go. I think the first target we can possibly have on euro dollar would be somewhere around here on the 15-minute. But the main target that I'm looking at is this one. It's just perfect. It's just a perfect target, 1.10, 240. 1.10 to 140, somewhere around here. Okay, so that would be my main part of targeting. So yes, if we break through this black line here, of course we're going to have some sort of pullback, but we main looking to, sorry guys, it's very lagging. Come to 1.1024. All right, finishing up. This is Euro. All right. Now,
It's the lead, right?
Satish has asked me a really, really good question. And I'm very glad you've asked this question. It basically shows to me, because I've said this on my video, so it shows to me that you have actually looked at the video. So to finish the PMI part of the video of the webinar today, I'm going to answer Satish's question. So why gold will go down when French and German PMI beat forecast? Let's first of all open gold chart. Yeah. That's a 50-minute. Let's go for the 1 hour. Oh, wow, it's raining now. Interesting. All right. So
no, I haven't tried. I think it's in the calendar.
We've had sort of a break from this bottom, okay? But it's a very minimal break on the 1 hour.
Yeah.
I wouldn't even consider this, but yeah, it's a break, okay? And now we're coming back. So we broke the top, broke the bottom. Maybe we're going to have some pullback. Now, the question what Satish asked me is, gold tends to decline when economic data such as the PMI from major economies like the France and Germany, they beat the expectation, okay? And we can see that on the exactly two I've showed to you guys. So if we come to any one of those from services or manufacturing PMI, we can come here, putting gold. This one as well. This one is the manufacturing PMI. Let me just select here. Okay. And then let's go for the year 2023 all the way to 2024. And then this one as well, 2023 to 2024. Perfect. All right. The probability of decline is at 66.67%. So it's higher than 50%. It's nearly 70%. Okay. For the services. Now, for the manufacturing PMI is at 58.33. So we are playing higher on the decline only, okay? The rise probability is lower, okay? As well as here, it's only 50%. And of course, 50% here as well. So the probability of decline, it just shows to me that it declines more than actually goes up, okay? Even if it comes under forecast for the manufacturing PMI, and if it comes over forecast for the services PMI, okay? Now, what are the fundamental reasons behind it? Okay, let me come back to gold chart. When we have a strong economic growth, better than expected PMI numbers from France and Germany, it pretty much signals that the economy are expanding or recovering faster than what is actually anticipated, what is actually forecasted. This growth typically boosts the confidence in riskier assets like the stocks, and it decreases the demand for the safer haven assets like gold. Okay. The second topic is that we can't forget is that the stronger euro generates a risk appetite. So a positive PMI data often leads to a stronger euro because it increases the likelihood of the ECB, the European Central Bank, to maintain or even tighten monetary policy. Okay. So a stronger euro, I'm not saying that they will tighten monetary policy. Okay. But I'm just saying that the market thinks about it as it is. Okay. A stronger euro can push the US dollar lower. But if the global risk appetite increases, then investors may shift from gold into higher yielding assets. And the third but not least is that gold is traditionally a hedge against economic uncertainty. So when economic indicators such as the strong growth in key regions like the EuroZone, they perceived a need, they need safety declines. All right, so leading to a lower gold prices as the investors, they feel more confident in growth and they seek for higher returns. Okay, so basically gold prices, they tend to fall when the PMI data from stronger economies beats the forecast, because it signals that that economy is resilient, especially at the moment that we are right now. So lowers the demand for the safe haven assets like gold and increases the appeal of riskier investments. Okay, so that's mainly my thinking about it. How should we and why should we short gold with the PMIs? Did I answer your question? All good on that? Hopefully I did, and we can move on. Okay, and actually we've seen gold, pretty strong. I've been mentioning 2,800 for quite a while right here, and 3,000 until end of the year. Most likely we will see 2,800, but most likely we won't see 3,000 for this year. So really interesting how we're traveling so far. Okay, now next topic is, so we've talked about the PMIs on focus. Okay, we've talked about USA PMI, we've talked about France, Germany, EuroZone. Now we're going to talk about the Bank of Canada has done a cut of 50 basis points, and how should we trade that? First of all, I would like to show some where it is now. Let me close this and close this as well, and this one as well. So yeah, perfect. So let me show you something very interesting. Okay, so we've had a dovish approach, okay, by the Bank of Canada. We're going to have a look on that very, very soon. Here it is, the website. So if you want to already be up to date, you can just type Bank of Canada monetary policy, click on the first link, and you will get redirected to this website, to this page. Now, I have two charts here. So I have the New Zealand against the Canadian dollar, and I have the US dollar against the Canadian dollar. So let me just put in the one now as well. This one is not lagging. That's good. So we've had a dovish approach from the Bank of Canada. They've cut 50 basis points, as we all know, today, midnight today. But look at how interesting the chart's actually moving, okay? Both of the charts, I've got two charts here. They had some sort of spikes before, all right? Right here, as we can see on this one, okay? 1 a.m. here, and this one, I can't actually see, but it's around halfway here, okay? So we had some spikes to the upside from the stronger currency, from the base currency, that in this case, New Zealand dollar and then US dollar. But then Canadian dollar takes step and it becomes stronger. So why did that happen? Does anyone know why? Does anyone actually have a read through? No clue? Okay. There's a lot of people joining us. Let me just accept it. Okay, perfect. So let's go through over this monetary policy first. Okay. I have summarized everything, so you guys we don't have to go through everything, so we can spend more times on the chart. But first, they've reduced the policy by 50 basis points. Okay, from 425 to 375. So from 425% to 375%, and the rate cut is. I also thought it is a dovish approach, but price reversed it. Yes, correct. So it is a bearish. Okay, this is bearish from the 50 basis points cut. It is very bearish for the Canadian dollar, because the lower interest rates make the currency less attractive for investors that are seeking higher yields, especially in the middle of such a market like this. The second point is the growth outlook. Okay, so the Canadian GDP is expected to grow slowly at 1.2% in 2024. Okay, rising gradually to 2.3% by 2026. So it reflects a cautious recovery, but growth is still relatively weak. Okay, so the rate cut is designed to support this gradual pickup that they are thinking of. Inflation has dropped, okay, significantly from 2.7% in June to 1.6% in September, and now near the bank's 2% target. The reduction of inflation provides the bank room to cut rates without stocking new inflationary pressure, so which is signaling to us a very dovish stance amid the growth. And the fourth topic is an excess supply. Okay, the economy is in excess supply, so meaning that the supply exceeds the demand. So which demands dampens inflationary pressure. So this, coupled with soft labor markets and weaker wage growth, adds to the need for monetary easing. Okay, so we have pretty much two things. Okay, we have the bearish for the currency because the rate cuts make the Canadian dollar less appealing for investors seeking a higher yielding. And we have bullish for equities and the domestic economy. Okay, lower rates would probably stimulate the borrowing, investment, spending, and will which support the economy and the business activity. So in overall, yes, the policy decision had reflect a dovish stance, with the central bank focusing more on supporting growth while inflation remains under control. So now, if we think about it, right, just the last sentence I've just said, the support remains under control, inflation remains under control. I think this is the main reason why investors are looking to stock on Canadian dollars and not only any other currencies, because we have a very good track record from the Bank of Canada since 2022. We've seen that inflation has been crazily high. Let me just actually pull it up, CPI on Canada. Let me just get it very, very quick. That just came to my mind right now. Otherwise, I should had it open. So 3 years. This is when? June 2022. Yeah, perfect. So we can see that June 2022, we had inflation at 8.1%. Okay, 8.1%. And right now we have inflation below 2%. So from June 2022 to June 2023, April, May, we had pretty much 6.6%. Sorry, luckily I could not mute that. All right, so from June 2022 to June 2023, we had a decrease of pretty much 8%. So from 8.1 all the way down to 2.8. Okay, that is 6%. Sorry, this is pretty good. This is pretty amazing. Okay, pretty amazing. So they could control the inflation in 1 year without cutting any rates. Okay, remember that they haven't cut any rates in there. They have raised the rates sufficiently restrictive to actually maintain the rates on a higher pace and then lower it when they know they could. And when is that? In 2024. And look at how cool it is. We start 2024 with pretty much 3% inflation, 2.9%. And right now we are traveling at 1.6%. So another pretty much 1% decrease. This is amazing. Okay. What the Bank of Canada is showing to us is a very, very under control inflation. They know what they're doing. They have been there. They know exactly what they have to do. And if we look the past 5 years, since July 2020, they were in 0.1%. So pretty much 1 year, 4 years later, they're coming back to normality.
Yeah.
Okay. So now taking this information and putting into context, okay, because I always say fundamentals without context is nothing. You have to be patient to actually work with fundamentals, because sometimes the market won't be playing that fundamentals right across. Yes, the market will play sort of economic data releases on the day, okay, like that, you know, like let's come back to a chart here. So as you can see, the rate has happened, the rate decision happened right on this candle. We can see, clearly we can see it. If we go to a 50-minute chart,
so I'll double check.
we can see,
I haven't been inside someone from
do one window only. We can see a huge spike. Okay, gaps all the way. So the market reacts on it, yes. But how this will continue to be in the future, that's the actual thing that you have to put in context and figure out.
Okay? Yeah, fantastic.
Satish says, I think lag affecting less. I think lag effects is less in Canada economy. So that's why Canada economy is going to get inflation again in future.
That makes the spread on gold.
I think lag effect is less in Canada economy. So that's why Canada economy shouldn't get inflation again in future. Okay, I got you. So you're saying that most likely we will have more inflation coming from Canada in the future, because there is a lag indicator. There is a lag phase for the CPI in there. Interesting.
Yeah.
I don't think so. I think they've done a pretty good job. I think Canada has a lot to do with oil prices as well. If we look to oil prices, okay, right here, we can look at, it's around $70 for WTI, and it's around $75 for Brent prices. Okay, so I think the economy will sort of heat up a little bit right now from 2025 for Canada, and then most likely we will boost the consumption of oil in the world, and therefore we will actually do better for the economy from Canada. Now, again, putting all in context and answering the question, how can we trade that? Should we long? Should we short? Should we don't trade Canada? What should we do? Well, my pick of the time would be USDCAD, okay, and New Zealand dollar CAD. So if we zoom out for a 4-hour chart, I just zoom this out.
Yeah.
Perfect. We can see that we are on a consolidation here as well. Okay. Majority of the times US dollar CAD is on a consolidation. Now, should I trade against this trend? Definitely not. I wouldn't be trading, okay, against this trend. Yes, it's on a resistance. We may look to, you know, have trade later, but I wouldn't be looking to trade that to the downside. What I would probably do is wait to break through, okay, wait these to break through that level and do something like this. Let me just draw it here. There you go. And then a pullback and then a continuation to the uptrend. Because what I believe is, I believe that USA is much stronger than the Canada. Okay. So if we think like that, yes, we may likely see a break through that area and a continuation to go higher. Now, if we look to New Zealand dollar CAD, I would utilize this as a hedge. Okay. So basically, minimizing my risks on the US CAD, I would utilize New Zealand dollar CAD and looking to go lower. Okay. That's a 1 hour. Yeah, that's a 1 hour. So looking to break this bottom. Okay. And targeting this area. Because I do believe that the comparison between monetary policy against RBNZ and Bank of Canada, RBNZ is much weaker than actual Bank of Canada. Okay. So I'm looking to trade short on New Zealand dollar CAD. and targeting this area of 82,250. Yeah, 82,250. Okay. Maybe if we have a pullback somewhere around this area of 83,280, then I would be looking to do somewhere around this. Let me just, oh, I don't know why it's lagging so much, so. Sorry. There we go. So somewhere around that, it would be my trade for New Zealand dollar CAD. Okay. Favorite trader. Now, look into EuroCAD, as Sweets was saying. EuroCAD is most likely, if we look at the probability between both of those monetary policy, I believe Euro could do better than the Canadian dollar. Okay, so but then it gets too wide in the portfolio. So I believe just USDCAD and New Zealand dollar CAD would be the best options. But looking to trade EuroCAD, I would probably look into long EuroCAD than actually short EuroCAD. The only currency that is even weaker than Canadian dollar, I think it's New Zealand dollar. Okay. All right, so we come to an end. So we had a look at the PMI. We had a look at how to trade the 50 base points cut of Canada, and I've answered everyone's question. So hopefully everyone had a good time, and hopefully everyone have a beautiful weekend ahead. Next week we will be back on Tuesday, so don't forget to brace yourself already for next Tuesday and Thursday as well. All right, and then the next month we're gonna have on Wednesdays as well. All right. I see some new names here. Ernest Matonga, nice to meet you. Welcome. Green, never seen you here. Thanks for the claps. Welcome as well. Matthias, maybe. And then everyone else, always here. Welcome, guys. Always welcome. All right, everyone. Thank you so much. Have a great weekend. Matthias, yeah, nice. Nice. From Nigeria. Very nice. Good one. All right, guys. Have a good one. And see everyone on Tuesday. And take care. See you. Bye-bye.